Hello, good morning, good evening, whenever you are. Welcome to another part of the Become the cTrader Master webinar with TopFX. Today, we are going to talk about Heiken Ashi Chart. Heiken Ashi Chart, which is another type of the chart you can find in the cTrader. So Heiken Ashi means literally, from Japanese, it means average bar. And it's an offshoot of the candlesticks technique. So if you are familiar with the candlestick techniques like this one I'm having right now, daily time frame chart of the euro dollar typical candlesticks chart, then you should be okay trading the Heiken Ashi chart. So let's just first find out how to apply the Heiken Ashi in the cTrader. So what you do is let me just remove this chart. There you go. This is daily time frame chart. Nothing happens. Okay, you click on the dots and you go to Heiken Ashi, right? So what should we check? Maybe we should check Heiken Ashi daily so we can have some kind of a comparison to the standard chart. So what do you see here? Let me just zoom in a little bit so we don't have this confusing numbers. Maybe even okay, let's just stick with this. Those are Heiken Ashi candlesticks. They use open close data from the prior period and the open high low close data from the current period to create a candlestick. So as you can see right now, the resulting candlestick filters out some noise to better capture the trend. So taken together, Heiken Ashi represents the average pace of prices, basically, right? So those candlesticks are not used as the normal Japanese candlesticks, as they don't display any visible bullish or bearish trading patterns that may consist of, let's say, one or two or three candlesticks, right? So what they do instead, these candlesticks can be used to identify trading periods, potential reversal points, and classic technical analysis patterns, right? So it is of course recommended to use the Heiken Ashi in conjunction with the candlesticks charts when trading different assets from spot market trends and for example to, let's say, predict, anticipate some kinds of future prices, which is why I told you that I will use the euro dollar popular chart, right? So let's now switch back onto the euro dollar. This is hourly time frame chart. Let's just switch to the standard daily time frame chart, right? So it's useful to make the Heiken Ashi candlestick charts more readable and the trends easier to analyze, basically, right? For example, traders can use Heiken Ashi charts to know when to stay in trades while trend persists, but get out when the trend pauses or reverses. Okay, so basically that's the risk difference between Heiken Ashi. Let me just zoom in so you can see it clearly. There you go. This is zoom on the Heiken Ashi. Can I just let's say what I want to do is to let's say click here. No, not really. What I want to do is to get rid all of the objects, like let's say we will get rid of the let's say what do we have here? Chart deal map. Okay, so we don't have the deal map, and let's say we will get rid of the grid. So there's no grid here on the typical candlestick. We will do the same with the Heiken Ashi. There you go. We got targets and we need to get rid of the grid. There you go. The grid is no longer visible. Let me just take a look if we can get rid of the daily separation, period separation bar. There you go. So now Heiken Ashi, of course we can make it different colors, right? We can the typical is of course The down candle, let's say it's of course red, as it is on the euro dollar daily time frame chart, and let's say the up candle is blue, basically, right? Now, this is the comparison between the euro dollar daily time frame chart and Heiken Ashi daily time frame chart. A little bit different. You can, especially if you take a look here. Okay, so what's the why this is different chart? What is the calculation formula, right, for the Heiken Ashi? Well, normal candlestick charts, right? So this one are composed of a series of open, right? Yes, so kind of an open, high, low, close candles. Yeah, 𝗙liche. This set is spread apart by a time series, right? So that's the normal. The Heiken Ashi techniques. This shares some characteristics with the standard candlestick charts, okay, but uses modified formula for of open high of a close, open, high, low. So this is the basically the formula. It's not 𝗙liche, it is cOHL. So close, yeah, we got the close, then we got the open, and then we got high and the low, if there is any low, of course. Different than the close. So it is obvious that before you calculate, you can calculate the future Heiken Ashi candlesticks, you need to have your first Heiken Ashi candlestick. Therefore, the first calculation simply uses data from the current open, high, low, and close. That's obvious. So the first Heiken Ashi close equals the average of the open, high, low, and close. So you divide 𝗙liche by 4. And the first Heiken Ashi open equals the average of the open and close, right? So open and close divided by 2. Now the first Heiken Ashi high equals the high, and the first Heiken Ashi low equals the low. So that's nothing changes here. Only the close and the open are being let's say different, right? So Heiken Ashi candlesticks are very similar to normal candlesticks, but they are offered different features. In cTrader charts, a Heiken Ashi candlestick is blue when the close is above the open. So you got the close here and the open is here, right? Conversely, Heiken Ashi candlesticks are red when the close is below the open, right? So the close is here and open is here. So that's kind of intuitive as well. This is similar to normal candlesticks as well, which are red, right? Normal candlesticks are red when the close is below the open, and green when the close is above the open. While the traditional candlesticks patterns can't be applied to Heiken Ashi candlesticks, there is still valuable information that can be got from these charts, because along blue Heiken Ashi candlesticks, like this one, for example, or like this one, is showing strong buying pressure over a 2-day period, for example. The absence of a lower wick, right, like this, like in this candle or this candle, or this candle, or this candle, represents strength, reflects the strength. So conversely, along red Heiken Ashi candlesticks like this one, or this one, or this one, right, shows selling pressure over, let's say, 2-day period, right? The absence of an upper wick, there is no upper wick here, no upper wick here, no upper wick here, a small one here. So the absence of an upper wick also reflects selling pressure. Now, small Heiken Ashi candlesticks, or those with long upper and the long upper and the lower wicks, show indecision over the last 2 bars. Let's say this is daily, so last 2 days. This often occurs when one candlestick is red and the other one is blue. Alright, so that's the situation. Yeah, it's a small one, small red, small blue, indecision, red one as well. Now, Heiken Ashi candlestick charts can be applied to any market, basically. Most charting platforms include them as an option, of course. In cTrader, it's like a kind of obvious, standard, obligatory. And of course, there are 5 primary signals that identify trends and buying opportunities, right? So blue candles with no lower wicks indicate a strong uptrend. Okay, so let's just switch, because there is no strong uptrend. Let's switch. Let's leave the daily, but let's switch to US dollar to Japanese yen. All right. So you will see what I mean. Let's just zoom out, and you can see this here. Let me just get my cursor. Oh, so we go. Blue candles with no lower wicks indicate a strong uptrend. There you go. Strong uptrend, strong uptrend, strong uptrend, uptrend, strong uptrend. Right? So that's the one of the primary signals that can help you identify the trend. Okay. Now, blue candles signify an uptrend. Okay. A signal to add to the long position and exits short positions, right? So if you see, for example, let's say, let me just zoom in. If you see this candle, right? So you see that this market is going up, and then first one, second one, third one, yeah, uptrend, uptrend, and then you see this one, it's a lower wick, right? And you still, this market is still going up and up and up. Now this week is very big compared to the body, yeah. So the candles with a small body, like this one, this one, this one, and this one, which are surrounded by upper and lower wicks, will indicate a possible trend change. Okay, so of course, the someone who was long here should exit somewhere here when he sees this kind of a candlestick, Heiken Ashi candlesticks, right? Of course, you can wait for the confirmation. First red bar. So let me just take a look here. You see this, and now you see that one. So you have the confirmation. All right. Now you see market is going down, 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 down. And those candles are red, and red candles indicate a downtrend, a signal, for example, to open the short position, sell position, or add to the short position, or exit long positions, right? So we should exit here, or even a little bit earlier. For example, if we trade long, right? If we trade so long, we see this, we said, oh, something is going to change. There you go, confirmation, and the market goes down, down. Series of the Heiken Ashi candlesticks with long lower wick and red body, and another one very strong. There you go, and another one which doesn't have this strong long let's say long lower wicks, right? And then of course we got this one, and look at this indecision, upper wick, lower wick, no body. Almost there is very small body. It's a red one, okay, fine, but it's a very small body. And what's happened then? Another one, almost the same one. So this again indicates a possible trend change. This indicates possible trend change. So traders should, of course, either close the sell orders, right, and try to open the buy orders, right? These signals may make locating trends or trading opportunities easier than with traditional candlesticks. The trends are not interrupted by false signals as often, and those are more easily spotted compared to the candlesticks, for example. Of course, there's way more of the candlestick signals when you use the typical Japanese candlesticks, not Heiken Ashi, okay? So there's more to be done here with the traditional candlesticks. Nevertheless, Heiken Ashi candlesticks provide chartists with a versatile tool that can filter noise, foreshadow reversals, and identify classic chart patterns. Generally, when we talk about this candlesticks, Japanese candlesticks, Heiken Ashi, Renko, and so on, all aspects of classical technical analysis can be applied to this chart. So traders, analysts, chartists can use Heiken Ashi candlesticks to identify support and resistance. You can draw trend lines. You can measure retracements. Not a problem. Volume indicators and momentum oscillators should work as well. All right, so you can add a little bit more if you want to the Heiken Ashi candlesticks as well. Right, so just to clarify this situation. So what we are doing now, we're going down, down, down. Then we have a first information that, hey, something is about to change. Come on, let's focus. And then we have this bar here. You see, this is hourly. No, this is daily time frame chart. It's still daily. So we have some kind of a reversal to the upside, and again, series of a 3 blue candlesticks with long upper wicks. Okay, long upper wicks. There you go. And another one. So you got 4 of them. The next one is a small one, small candlesticks with long upper wick, and there's a confirmation that we might be going down. And of course we extend to the downside unless there is this again. Look at this candlesticks here, Heiken Ashi. Long upper wick, long lower wick, long upper wick, long lower wick, but smaller body than the previous one. And the next candle is again big blue candle with long upper wicks. So we should go up, and we go. And then again, you see, and this candles, and then again up we go. So we have some kind of a pullback or retracement. Up we go. Pullback, retracement, up we go. Up, up, up. 1, 2, 3, 4, 5, 6, 7, 8 candles in a row. Beautiful uptrend, Heiken Ashi. And then next 9 candle is indication of something is going on. Something is going on here. Possibly trend will change. So please pay attention here to this situation, right? So for example, let's add some kind of a lines here. I would like to add the trend line here, horizontal trend line, horizontal support line. Okay, so we broke above it, right? That's the last swing high. We broke above it. Now look, we decided to go lower, test it. The market tried to rally because we got this blue candle, but as you can see, those candles are small. Market is not doing much. It's just hovering above the trend line, yeah, the horizontal support line, and then you got the breakout to the downside, and then another very typical candle. Yeah, we've seen these candles before. So we got some longer period of the consolidation. Then with blue again, blue, but with longer upper and lower wick. We should prepare for something. Small candle, and then again we're probing this market lower. You see, we're probing this market lower, possibly because there is one more line to be used here, which can where's my line? There you go. Horizontal line, which can be applied here to the close of the, you see, to the close of the body. That's a different technique. So right now all of these lower wicks are bouncing from this level, you can see, and now we have the situation when possibly we will continue to the upside. So we have like a reversal, Heiken Ashi, and another. You see, this high is higher than this one, and of course this one. So we have a new swing high, and then again almost equal, no new high, marginal one, and then there you go, another indecision candle showing us the opportunity that maybe we should exit our buy orders. And the next one is down, and the next one is small one, so not that bad. Good candle to the upside, small one, good candle to the upside, up, and then again indication something might be going on, and up we go again and again. Some kind of a pullback, invalidated, yeah, blue candle, and that's a big one. Here. This is a big candle, way bigger than previous, I don't know, 20-30 candles. That's always some sort of the warning from the market. Yeah, remember, we analyze small candles, we analyze big candles, we analyze candles with big body and upper wick, big body, and lower wick. Okay, that's the difference between analyzing this chart when you are using just the candlesticks pattern. So this is big. This candle here is big. This is something is about to change, because this candle is way bigger than the previous 30, 40, 50 candles. Something happened here. And the next one is small one, red, 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 and then they try again, but never, they will never go. For now, it's been like 2 weeks, and they cannot go. Let me just add it. Oh, there you go. I want just to add it. I want to add it here to the swing high, 150.19. Let's say this is the swing high, and we never look at this. We never went above this level, 150 point, let's say 30 something. I guess there was 150.21. We are very close to this level, and those are the newest data. We are very close to this level. We have, of course, blue candles, which means the bullish pressure is present, but look at these candles. This is not that good. The candles are small, upper wicks, lower wicks, upper wicks, lower wicks. Those candles are completely different. Those candles are completely different, right? And that big candle is a warning that something might happen soon. There might be some sort of the reversal. So let's say if we see this situation here, if we take, for example, some kind of a let's say oscillator, because we can use indicators as well, right? And if we add typical stochastic indicator for this chart, yeah. So let's go to the stochastic oscillator. We won't change anything. Let's say it will be like this, and you can see that this market is extremely overbought. Yeah, if we change the settings in this oscillator, right? So if we just let's say we want to make it a little bit longer, so K periods will be 9, as the periods will be, let's say 9, and the key slowing will be 21. Okay, so we can see pretty clearly that right now with that settings, that this market has been moving up from the extremely oversold conditions to the overbought, and now it's simply still under the bullish pressure, right? But there is a cross of the K line over the D line. Okay, so that means they are still trying to go up, but they don't have that much let's say power. If we want to use something different, let's say we'll use one different indicator with the Heiken Ashi. We will use MACD histogram, and okay, standard settings. Yeah, so what do we see here? If we just zoom out a little bit, it's always better to see it. You see the market is going up, the histogram is going down, so we have a divergence. All right, so we can combine this kind of approach, the classical methods of the technical analysis, together with the Heiken Ashi candlesticks. Just we need to pay attention to different aspects of the candles when we analyze this market. So one more thing that we can add is, of course, the moving average. Okay, the moving average will be might be a little bit tricky to apply. So maybe we should do let's say that the trend indicators are fine, and we will do the simple moving average, weighted moving average, DMS. It's okay. Parabolic star is okay. Oscillators, awesome oscillator. There you go. Awesome oscillator. It should be even more visible that while we do going up, the market, the oscillator, the awesome oscillator histogram is going down. So there is some sort of the divergence cooking on this on these markets, right? So it will be better to pay attention to the current market developments, because it might be some sort of the signal indication from the Heiken Ashi that this big trend to the upside is about to complete. Let's at the end of our meeting, let's switch. Heiken Ashi is here. Let's switch to weekly. This is a weekly time frame chart. Look, the weekly, if we zoom out, Yeah, the weekly is uninterrupted. Okay, the weekly is uninterrupted. Our technical resistance, sorry, now it's technical support, is very important. Look at this. This market has been here. If we add one more line, just for the educational purposes only, if we add one more line like here, somewhere, yeah, you can see it straight on. Maybe it's not that precise, but you can see it straight on that there was a test, and the market reacts to this level, even on the Heiken Ashi chart. So what do we see here is this, and of course, guess where is the next target? The next target is, of course, here. This is the biggest level in years, 152, let's say, and that's the next target for boost. So on a weekly, we are still, the Heiken Ashi candles are showing us that this is still very, very strong uptrend. Yeah, we can see it by judging by this candles here. Uptrend is being indicated by blue candles with big upper wicks, upper wick, upper wick, upper wick, upper wick. Something is going on here, as we notice on the daily time frame chart. So these upper wicks are not that big, body is not that big, and there are some kind of down wicks. Nevertheless, it's still uptrend. It's still bullish pressure on the US dollar to Japanese market, and this is how you use the Heiken Ashi. Basically, in the cTrader, you can analyze any chart. You can analyze S&P 500, ETFs, I don't know, gold, silver, Bitcoin, pound, yen, whatever you want. Basically, it's basically a very versatile tool, a very versatile charting technique to use by the forex traders, analysts, and chartists. That's everything from me for today. Thank you very much for watching this webinar. I hope that you learned a lot about the Heiken Ashi charting in cTrader. Thank you very much for being here, and I hope I see you guys next time. So take care and bye bye.